Hello, good afternoon, and welcome to HYCM's online trading workshop with myself, Giles Coughlin. I'm going to be taking you through the next hour, and we're going to be looking at some of the most significant market events that are happening, and I'm going to be showing you how I'm approaching the markets at the moment, and I'm going to be using my usual system for intraday trading, and I'm going to be running that through with you so that you can understand. Okay, hi guys, you're coming in now. Hi Aaron, hi Lorato, hello Femi, welcome back guys. Van, Solomon, good to have you on board. We've got quite a lot to cover this for this hour, so I'm hoping it's going to be a good whistle-stop tour. Don't forget, if you're watching this webinar on a laptop, don't forget you can take screenshots if there's things you wanna look through. We've got quite a lot to cover. Before we get going, and just as other folks are coming in, just going through, obviously, that as we're looking at different setups, different currency pairs, it's not trading advice. And the whole idea of this workshop is not to give you advice on how to trade, what to trade. Instead, it's all about education, showing you the process through which I approach the market so that you can learn by watching what I'm doing so that you can begin to make trading decisions for yourself. So just to be aware of that, that's the whole spirit with which this takes place. Hi Nadir, good to have you on board. Hi Aaron, Byron, good to have you guys here today. That's excellent. I hope I'm coming through. Oh, that's good. Nadir's replied, so I presume you can hear me okay. So that's good. I'm always pleased to know you can hear me, so I'm not accidentally talking to myself. So we'll just get on with the session because, as I said, there's quite a lot to go with. So what we're going to be looking at for the next session is the special topic is we'll be looking at silver. Now, there's an interesting set of scenarios setting up for silver at the moment, and it's reminding me a little bit of gold when gold was at $1,450 an ounce. A couple of months ago, before the Federal Reserve's latest dovish turn, and that resulted in a breakout for gold on the US dollar weakness. Now silver is approaching, was just broken through the $16 overhead resistance level. So we'll be looking at silver and seeing what we need to look out for to kind of, show us and direct us what the market's going to be meaning for silver. And we're also going to share some other information for you that is a little less widely available. Handout for the session, you can find this on your GoToWebinar control panel. Just click on the handout, click on the workshop guide, and then a workshop guide like this should appear. Let me, hang on. He says, a workshop guide that looks like, hang on a minute, I'm just going to drag this over from my other screen. That's better. So it's a workshop handout that looks like this, okay? So there you can see the special topic we're looking at. And there's 1, 2, 3, 4, 5 titles. And these titles aren't chosen at random, I've chosen them specifically. It's the process by which I automatically go through in the market every time I approach my trading terminal now. I look back, I look forward, I look at the charts, I look at my risk, and I look at the outcome of my trade. I printed this out, I organized this for you in such a way so it's helpful that you can print out and put by the side of your computer terminal or your table, and you can refer to it. So we will be referring to this as we go through the session. So those of you who regularly attend are familiar with that by now. Any suggestions for topics, just email me, giles.coughlin@hycm.com. Love to hear from you guys, and just drop me a line if there's something you're wanting to listen to as well. Anything that you're going to find helpful. Just drop me a line there and we may be able to cover it in a future session. Okay, so turn to your handout, it looks like this, and we're going to start off before we do it by looking back, okay? And conceptually, what you want to understand in your mind, the whole process of looking back is all about recognizing which sentiment is opposite to one another. So in other words, which currency is likely to be weak and which currency is likely to be strong. We're trying to pair up a strong against a weak currency, because if we've got reasons to buy a currency and reasons to sell a currency, then they're an ideal currency pair to trade because they should be moving in opposite directions. And that's all that this is about. This is what it's trying to assess, trying to find currencies that have opposite pressures on them. One currency can be bought, one currency can be sold, so we trade them together. That's what we're trying to look at, because we want to put the greatest chance of success in our favor. And once you're trading currency pairs that you have a strong sense which direction they should go in, then you're not going to be surprised by the market. You're not going to be insecure in your trading. You're going to start to understand, okay, I know why I'm trading, I know the reason. So let me explain what I mean as we go through. So we're going to start to look back. And in this section here, we want to identify recent sentiment by reading up on the last 2 sessions of market activity and identify that key market sentiment that we summarize in a sentence or two. So sentiment is just the mood of the market. So it could be the fundamentals, it could be a short-term move that's going against the larger fundamentals. It's just the present mood of the market. That's what we're trying to assess. So we're going to look back. We're now in the European session. We had London session this morning, Asian session overnight. So we're going to look back to the US session yesterday. Now, yesterday, what we had is a rally in the US equity market on optimism that there was going to be some movement towards reopening US-China trade negotiations, okay? So there's hope that the US-China talks could start back up. If you remember back to when Donald Trump went to Japan, he met the Chinese President Xi, and they agreed a truce at those Japanese and at those talks in Japan. I think it was G10 trade talks in Japan. And Trump and Xi agreed a truce. Okay, now that truce has moved on, or a ceasefire rather. It's not a full-on truce, it was just a ceasefire. Trump said he wasn't going to put any more tariffs on China. Now it's taking a step further, and US-China trade negotiations may be able to reopen. Okay, so just to be aware, that has resulted in a boost in US equities, simply because if US-China trade talks go well, it's going to be that US companies are going to do better. They're going to have less, there's going to be less kind of trade troubles for them and hoops for them to go through. So US companies will do better. So that's why US equities have been rising on that optimism. So the scenario that we're looking at now is that the US is likely to visit China next week for face-to-face talks. Okay, so this is face-to-face talks, and hopefully that this is going to result in trade negotiations restarting. Okay, so that was the optimism that was in the US session last night. Now, want to just fill you in on the US dollar. The market has been quite quiet recently, and part of that reason is we've got 2 key events coming up. We've got the European Central Bank meeting on Thursday. As well as that, we've got the Federal Reserve meeting the 31st of July next week. So we've got 2 very important central bank meetings taking place. Now, before this week, the US dollar was being sold off on these growing concerns that the Federal Reserve would cut their interest rates by 50 basis points this July. Now, a cut from the Federal Reserve was being priced in, and a cut of 25 basis points had been priced in, but a cut of 50 basis points hasn't been priced in. So the US dollar was being sold off last week on this fear that there was a Fed speaker, and the fear emerged that there would be an interest rate cut of 50 basis points in July. Now, since then, the US dollar has been supported because the Federal Reserve pushed back against Fed Speaker Williams' comments, and they've downplayed expectations for a 50 basis points rate cut. And this makes sense because the US data has been good, the US wages are good, US consumer is strong, US employment is holding up, and so that's why we've seen some US strength. So at the moment, we're seeing some US dollar strength that's coming in on the dialing back of these 50 basis points rate cut. Now, let me show you, those of you who are at the FX week ahead, look ahead, this will be helpful for you. Now, this is the current probabilities for the Federal Reserve rate cuts, okay? Now, I'm in a moment going to give you this website so you can see it. This is from the CME Group, and they publish on the internet, freely available, the probabilities for the Federal Reserve's rate cut. You can see there at the top, target rate probabilities for 31st of July 2019 Fed meeting. Okay, now, at the moment, target rate at the moment is 225 to 250. Okay, so a 25 basis point cut, which is this bar chart here, is being priced in as 80.6%. Okay, so 80.6% of a 25 basis point rate cut, and now a 19.4% chance of a 25 basis points rate cut. Now, last week, this got as high as 50%. And when we did this webinar on Monday, it was around 25%. So now it's gone to 19.4%. So the less likelihood is seen of a 50 basis points rate cut, the more US dollar strength we're going to be seeing. Okay, so you see there's this readjustment that's going on in the market at the moment, and it's really going on today. We're seeing US dollar strength. Now I'm just going to give you that tool. Okay, it's the Federal Reserve interest rate tool. I'm just going to send it to you all, guys, because it's very helpful for you to have. And you can see it's just moved up now. It's 23.5%. So we're seeing some shift in that. I will send it to you now. It should be all coming to you in the question panel. I'm replying to you, your greeting, Nadir, and I'm just sending that to everyone. Okay, so you should all have that now. If you've got it, just ping me a message, let me got it. If you haven't got it, please let me know if you haven't got it, just so you know. It's a really useful tool and one to watch. Okay, so what you're watching for is the higher that gets, we're going to see more US dollar weakness. Remember, when interest rates rise, a currency appreciates. When an interest rate falls, a currency depreciates. So that's why the currency, oh, thanks, Aaron. That's great. I'm glad you got it. That's why the currency at the moment, the US dollar, was strengthening on the back of the higher rate cut becoming less probable. Okay, so that's the relationship of what's going on there. That's the tool, very useful. And look at that going into the July rate meeting next week on the 31st of July. So be aware of that. Okay, it's a very significant meeting. Will be very significant for the US dollar, and it will be very significant for commodities, gold and silver. So have that on your radar, please. Now, US session. Now, very narrow range for the euro-US dollar pair. And yesterday's US session, it was the third narrowest range ever on the euro-US dollar pair. There's a lot of uncertainty. There's a lot of waiting around. We're approaching the summer months when FX volumes really decrease. So we're seeing some of that summer malaise, that summer tiredness coming into the market. And just to be aware that the market is waiting on these two key events, the ECB on Thursday, and they're waiting on the Federal Reserve next week. They're the two events. And often before like a big event, ranges narrow because people don't want to start new positions just before a significant market event. Okay, it was similar to when the Federal Reserve last met with their interest rates, and you saw ranges narrowing. That's the same kind of thing that's taking place now. Okay, yesterday's session, the pound US dollar was under pressure ahead of Boris Johnson's likely appointment as PM. Now, we'll cover that in a moment because obviously he is PM now. And one of the hopes of the leadership race is that Boris would unite the party, but that hasn't happened. We had a cabinet member quitting yesterday, and the prospect for the UK is difficult. Now, Boris Johnson has now been appointed Prime Minister of the UK. He's been, he's the front runner. I think tomorrow he'll be officially the PM. But he's won the Prime Minister title race, so he will be sworn in tomorrow as the Prime Minister of the Conservative Party. For those of you who are unfamiliar, maybe not following British politics, Theresa May was the Prime Minister for UK, with the leader of the Conservative Party. However, because she failed to deliver Brexit, she's had to step back out of being the Prime Minister, and there was a contest within the Conservative Party, and Boris Johnson has won that contest and will now be the Prime Minister of Britain. Now, the thing to look now for the pound is there's a number of different factors. I'm just going to go through them. The first thing to be the market's going to be looking at is who Boris Johnson has in his cabinet. Okay, now the cabinet is like the inner circle. Okay, so who Boris appoints as his key cabinet members will be seen as indicative of what Boris Johnson's perspective is going to be on Brexit. Okay. So those cabinet appointments will be eyed carefully. Don't worry, you don't need to know all the front runners or who it could be. Just look at the information when the cabinet members are actually appointed, because that will give you a good indication of who is a good, how that's going to affect Brexit. Apologies, my phone was just going. I've just turned it off. Thank you. Next thing, if Boris Johnson can't secure a working majority, he will call for a general election. This is something to be aware of. Boris Johnson is facing a number of significant challenges as the leader of the Conservative Party. Not least is that he may not be able to secure a working majority within the House. Now, you need a majority in order to be able to push through your plans. Okay. Now, the big issue for the UK at the moment is, will Britain be able to leave the European Union? Now, although it was 3 years ago when Britain voted to leave the European Union, Britain has been unable to leave. So Boris Johnson has said famously that he's got a do or die Brexit approach, and that October the 31st, for better, for worse, do or die, Britain is leaving the European Union. So that is the timetable that's put in place. But Boris Johnson has a problem, because Boris Johnson can't decide on his own to leave the European Union. He needs all of Parliament. He needs a majority in the Parliament to agree with him. Now, one expectation would be maybe Boris will be able to freeze Parliament and force through a no-deal Brexit. Now, that has been forbidden by an amendment that took place a few days ago. So Boris can't do that. So if Boris Johnson can't get a working majority to get enough people to agree to Brexit within the UK Parliament, then he's going to have to call a general election. Now, if he calls a general election, Britain is in a very interesting place, because the Labour Party are essentially a Remain party. The Conservatives are a Brexit Leave party, but there's some caveats and some rebels within the Conservative Party. The Labour Party is not very popular at the moment, because Jeremy Corbyn is facing accusations of allowing anti-Semitism, racism to really grow within his party. He's very low down on popularity. He's also, he's not a very inspiring, or he doesn't seem to be a very succinct figure. This is what we're going to do. It's quite vague, and as a result, Labour policy has been quite vague, and there's people within the Labour Party that want to leave the European Union, even though the leaders in the party want to remain. So Labour itself is divided not only as a party, but also the supporters within the party. So at the European elections that took place, a few weeks ago, what we saw was that the Liberal Democrats gained votes as a Remain party. So this means if there was a general election, okay, there's a number of different things that could happen. We might end up having what's called the Brexit Party, led by Nigel Farage in the UK, who was the UKIP leader. Now, he attracts voters because he's quite clear, Britain needs to leave the European Union, full stop. He's charismatic and easy to understand. So the people that want Brexit, he will attract a lot of those pro-Brexit voters, which will mean you could end up with a parliament that's divided between a Conservative and Brexit party on one side, and then Labour, Lib Dem, and the Green Party on the other. So we could be facing a nearly completely divided nation. So in terms of what they'll do for the pound, it's too early to tell. But the bottom line to be aware of is the more likely a Remain scenario unfolds, the stronger the pound will be. So just to be aware that if we get some positive Brexit news, that Britain won't be leaving the European Union, there's an agreement, then the pound is going to rocket. Buyers are going to come in instantly, and that buying of the pound is going to be prolonged. Okay, that's the key thing as traders we need to be aware of. If the Brexit scenario recedes and it looks like Britain's going to remain within the EU, or a deal gets done, or something positive that's concrete, we're going to see the pound rally. Okay, the pound will rally instantly, and the pound will be bought on the dips. So just to be aware of that, that's a key thing. Now, summer recess starts in UK Parliament this week until September the 3rd. So Boris may call an early election, just to be aware of that, and we may face a split UK government and a great polarisation of British politics, ultimately, which could be very harmful for the country, and certainly very divisive, and potentially, but whether it's pound positive or negative will depend on the detail. Okay, so just be aware of that. So this week, look out for an early election call. And if there's no early election, then Boris has time to go to the EU. He's got a few quiet weeks, because UK Parliament, after UK Parliament dissolves end of this week, it won't meet again until September the 3rd. So that gives Boris a few weeks to go to the EU. So we won't have any unlikely to have UK political headlines during that time, but there may be some positive things out of the EU. So that's a quick look at pound. But Boris Johnson has now been appointed as Prime Minister. Look for positive Brexit news on the pound for strong pound buying. Okay, that is the trade that I'm looking at. And let me just show you, how why a trader can have conviction with that. Because you might just think, okay, well, why is that the case? Why would the pound be a strong buy? Well, let me show you. This is the Commitment for Traders report. Okay, now each week the Commitment for Traders reports shows the positions among non-commercial traders. Okay, so we're looking at hedge funds, institutions, investment companies, and what we see is the largest short position of all these currencies was the pound. Okay, so that means 76,000 contracts are short in the pound for last week, and that was an increase in already a very high short number of 3,000. So that means that the pound shorts is now the largest speculative short position since September 2018. So we have very, very high number of short positions. Now this is how you use the Commitment for Trade report. Okay. If the Brexit scenario reverses and Britain is going to be able to stay within the EU, or there's going to be some really good deal for Britain, then all the companies that have been short pounds, all the hedge funds, will start to unwind their positions. Now, if they unwind their positions, what will happen to the pound? It will rise. It only has one way to go. So just the way to use the COT report is you look for a COT position that is contradicted by a fundamental picture. So here, if all of a sudden there was some positive Brexit news, all those short positions, they will start closing all their positions. And as they close their positions, it will only drive the pound higher. That's how you use the COT report. You look for a position that's a contradiction or in conflict with the fundamental picture. You don't just trade it and say, okay, 21,000 people are long CAD, so I'll be long CAD, or 76,000 people are short the pound, so I'll be short the pound. If you use the COT report like that, it won't be of benefit to you. I remember one of my colleagues did a report, and he went back a number of years, and he followed. If you had just gone short when the Commitment for Traders was short, or long when the Commitment for Traders report was long, essentially you would have broken even over all those years. Okay, so it's not an effective strategy in itself. Just one of the reminders, one of the first things that Boris Johnson has said he will do, he'll seek a US trade deal as his first move as PM, so just watch out for that. That was a report by the Times last week, so I've just pulled it up this week to remind us that could be there. Also, Boris Johnson is launching a charm offensive to calm no-deal rebels. Look, this is what I was talking about. He knows that the chances of a parliamentary majority for the Conservative Party is low. So he's trying to charm people who he knows won't be supportive of his hard-line no-deal Brexit approach. Okay, so secret meetings at Hammond, Gore, Rory Stewart, okay, and he's trying to get people to support him. Okay, that is what Boris needs. He needs support. The more support Boris gets, the more chance of a no-deal Brexit. So it's one of those scenarios, you know. Ironically, the better Boris does, the more the pound's going to be pressured as it begins to factor in that no-deal Brexit. Okay, Asian session. Now, Asian equity markets were mostly higher in the overnight trading. They followed the US path. Okay, so this is how we follow the story. US equities were rising on the optimism of a US-China trade negotiation starting again, and Asia followed suit. Okay, the Asian equity markets influence each other. Okay, what's good for one equity market tends to be good for the Asian equity market, the European equity market, and these three bourses that go around in this circle: America, Europe, Asia, America, Asia, Europe, America, Asia, Europe. And when America's equity markets close, Asian equity markets open, and we've got the Nikkei up 0.95%, Hang Seng 0.2, Australian 200 0.4%. Okay, so there's some strength there. Now, there was some interesting news out during the Asian session, and this was that the New Zealand dollar had a sharp drop with the report that the RBNZ have been working on unconventional policy. Okay, now this was a headline from Bloomberg, and they basically said that the RBNZ say they're responding to an official information request. However, market participants quickly read this, that the RBNZ say that they are looking at floating the idea of quantitative easing, QE. So this is why the New Zealand dollar was sold off on the headline. Now, learning point again, remember, when you see quantitative easing, mentioned, either it's going to increase or start for a country, it causes a currency to lose value. Quantitative easing is simply the printing of digital money, and it's used to buy things like government bonds, government debt. So when we saw this report, this rumor that the RBNZ are considering or working on unconventional policy, then the market read, aha, they're thinking of quantitative easing. Now, that results in a lower currency. And so here we have in the Asian session, this is a 15-minute chart, we saw New Zealand US dollar, we saw the New Zealand dollar sell off because of that data. Now, let me show you where the New Zealand currency is now, and just doing a screenshot for you, just quickly show you. And there we see that the New Zealand US dollar has continued to sell off and is now testing those lows at 0.67181. Okay, so we can see that the New Zealand dollar weakness came into the market in the Asian session, and that weakness has carried on over the course of the London session and into the American session. So just to be aware of that. So the end of the US session, we got equities being bid, and the market was in more of a risk-on mood. So we've got US dollar was strengthening on the back of rate expectations, moving back to a 25 basis point cut. Now, here's a question for you. If the US dollar was strengthening, we've seen the reasons for the US dollar strengthening. So at the end of the Asian session, One of the strong currencies would be the US dollar. Now, if the equity market is rising, we're on a risk-on mood, okay? We saw risk coming into the market in the American session. We've seen risk in the Asian session. We've seen commodities, we've seen rather equities rising. So which currency would we expect to be weak in a good risk-on mood? Which currency would we expect to be weak? Olufemi, gold star, top marks. Well done. You're the first one there. It's Japanese yen. So that means at the start of the Asian session, I was looking to, at the end of the Asian session, start of the European session, come to my desk, I was looking at the US dollar as the strong currency and Japanese yen as the weak currency. So I'll just go to the US dollar, Japanese yen chart, and I will show you that here. Okay, so what I was looking at here was the US dollar, Japanese yen long. So I came to my desk here around, just around 6:30 a.m. I started off here in the UK, and I was looking to go long. Now I was looking for longs from the 108 level. Okay, so the way I was looking at the chart, I was looking here. So I was looking at this horizontal line, see that resistance level here, there, and that support level there. So I was looking at this level here around 108. So there was a number of things that were there for me. There was the 108 level, there was the 100 moving exponential moving average, there was the resistance level here as well. So all those around that mark were a good place for me potentially to go long. Okay, so I was going long there from that 108 level. Now price didn't go down and hit my entry, but that's what I was looking at, and I had my stops nicely completely out of the way, 107.75. So that trade, as long as we're in that risk on market, as long as equity markets are being supported, and as long as there's positive sentiment about the US-China trade talks, then that trade remains in play. Okay, so you could still take that 108 level. Now, obviously, I'm not recommending you to trade, and if you're going to be away from your desks, you want to be careful, because the US-China trade negotiation, you know what President Trump is like. He instantly will tweet out something, and all of a sudden the deal's on, then it's off. So very headline sensitive. So just be aware of that. However, with that having been said, that situation still is possible. Okay, so that was what I was looking at the end of the Asian session. Now, that's it. Okay, London session, just going to cover some of the key stuff. The pound was sold off initially in the London session, and this was on Bank of England's Monetary Policy Committee member Michael Saunders giving a Bloomberg interview. Now, he said that UK economy is weak and clearly not overheating. He said the Bank of England can't stop a no-deal Brexit from being painful, and says no-deal Brexit would push the pound lower. He also said it's very much a continued shift in tone for the Bank of England. They look to ease market expectations in anticipating that it will stick with their gradual but limited rate hikes. Right, so what's going on here with Michael Saunders is a hawkish member of the Bank of England. He's the most hawkish member. So the way you trade, board members' comments is this: if you have a dovish member saying a hawkish comment, that is very bullish. If you have a hawkish member saying a dovish comment, that's very dovish. So here, this Michael Saunders is normally the guy who's pushing for normalization, pushing for a rate increase. He's the most hawkish member. So what he's saying here is very dovish. So that was the reason the pound was sold off on his comments, just because the market, took it like quite depressing. That's quite negative for the pound. We've got a hawk who's now turning dovish. Things must be bad. Okay, so that's just to be aware of that. However, the pound did recover in mid-session and eventually rallied to a high of 1.2482. That rally, of course, was with the appointment of Boris Johnson, who was appointed to be PM. Okay, so we've covered the pound fully. We won't go into that anymore. However, there's something I wanted to draw your attention to, and there wasn't an easy place to put it in, so I want to put it in here. It's the Canadian dollar. Now, the Canadian dollar, the Bank of Canada, is the only major central bank that is not looking at cutting interest rates. Okay? It's got a neutral stance, and that neutral stance in this present market environment is Canadian dollar bullish. And the reason is that so many other major currencies are taking a dovish shift. The Federal Reserve is cutting rates next month. Could be 25 basis points, could even be 50. The Bank of England has got a dovish shift. The European Central Bank meets tomorrow. They're likely to take a dovish shift. The Reserve Bank of Australia have cut rates recently. There may be some more cuts coming. RBNZ have cut rates. There may be some more rate cuts coming. The Bank of Japan is in very low inflation. The Swiss National Bank has the world's lowest interest rate, has negative interest rates. So that means that the Canadian dollar is potentially bullish. Now, the reason I'm not just jumping into Canadian dollar longs is because CAD's correlation with oil. Okay, you have to always know what's happening with oil when you're trading the Canadian dollar, and oil has been pressured recently. It's sort of, it's bouncing around a little bit more now with some tensions in the Middle East, but oil over the last kind of few days has been sold off quite heavily. It's sold off through a pivot point on the daily chart. Okay, so what we're looking at now with oil is if there's a recovery in oil and we start seeing oil growing and being bid and being bought, then Canadian longs could be very interesting. So look out for that in the next coming weeks, not coming weeks rather, next coming days. If we see oil recovering, we've got inventory data out for oil tomorrow. That could be a catalyst, and then that could also be a catalyst for longs on the Canadian dollar. I hope that makes sense. So something just to be aware, keep on your radar, realize, okay, CAD is bullish because its central bank has a neutral stance. And if oil is going up, then CAD has a double push behind it. It has the central bank being neutral and it has oil. The Canadian economy is highly dependent on oil. That's why it has such a close correlation with oil. What's good for oil is good for CAD. What's bad for oil is bad for CAD. It is pretty much as simple as that. So make sure you've got that relationship, but look out for that, okay? It could be very good. Silver in focus. Right, now this is, again, a very interesting chart and one I wanted to call up to you. Now, let me show you where I'm just going to take a quick screenshot of silver. There we go. Okay, right. Now this is silver chart technically. We can see technically this was its overhead resistance on the daily chart. We had a breakout of the 16 level handle, break and close. That's a little tip when you're looking for a technical breakout. You want to see a break and close. Here, break, rejection, break, rejection, break, rejection. This is the tail, break and close on the daily. Strong signal. So technically, we got a strong signal, strong move to the upside. Look at the way it rushed up to that level, rushed and smashed through. And now we're making through to these highs, making our way up to the resistance 3 pivot point. Okay, so stay above 16, it's bullish. Get below 16, it's bearish for silver. Now, that's the technical look at it. Let's look at some info. Now, the exchange traded fund holdings backed by silver are increasing at a faster rate than gold. Okay, now look here. Look at the chart below. You'll see that the ETF holdings of silver are the blue line, and the ETF holdings of gold are the yellow line. You can see that silver's holdings of ETFs, holdings of silver is increasing. Okay, now there's a sense in which we could be at the mountaintop. Okay, we have had a period of strong US growth. We've had a period of rising US interest rates. Countries around the world were rising interest rates, but now that's paused. Okay, so that means that interest rates are going to start to fall. So if interest rates are going to start to fall, then investment firms are going to look for other places to gain value. And okay, the bond market is one key place to gain value, but gold in this environment and silver become more attractive. Okay, so if the Federal Reserve, for instance, cut interest rates by 50 basis points, then we can expect more upside in gold and silver, not only because the gold and silver chart is traded against the US dollar and we see weakness in the dollar. That is a factor, but it's also because investors are going to look to put their money elsewhere. And gold has an attraction in times of uncertainty. The downside with gold is that you don't get a dividend. You don't earn anything by holding gold. So that's why, in recent years, we've seen it fall back down again from those record highs. Will we see record highs again in silver and gold? I don't know, but if we see a return to very low interest rates again, then it's most certain, it's most likely that gold and silver will increase. And you can see, look, as the total known exchange traded funds of silver have increased recently, and they've increased rapidly, we see the the gold silver cross dip down to 88. Okay, so that might carry on. We might see silver moving higher more quickly than gold. That's what I'm trying to point out and say, look out for it. Okay, silver's been on a solid run this month, and the present environment is making that more attractive. The prospect of a US-China trade war that can flare up in a single tweet, the rise of negative yielding bonds as central banks cut interest rates around the world, and a weakening dollar on a dovish Fed all make silver attractive. Now, if the Fed do go and cut interest rates by 50 basis points, then silver will shine even brighter, and we will see silver being bid for support. Okay, that is the most likely outcome of that scenario. Now, again, this isn't trading advice. I'm just simply presenting to you what I'm looking at. I'm looking at this chart very, very carefully, and I'll be looking at what the Federal Reserve do. Okay, so it's well worth having a look at the silver chart for that reason. So I just want to flag that up to you. Oh, that's from a previous week. Ignore that slide, please. Now, this is again worth screenshotting for yourselves. Free resources to work out sentiment by yourself. If you just screenshot those, I've put down a few different websites to help you work out sentiment. It can be daunting at first to work out the sentiment, but that is a list of resources that are free. Okay, and you can find some, good information on those places. Forex Live, I work with these guys on a daily basis. They've got a little tab. I'll just show you folks there now. Okay, I'll just show you a little resource. It's helpful to know because people don't always know it's there. Oh, hang on. There we go. I lost it. There we go. Right, now, sorry, I'll use my other controller. There we go. But if you go to the trading session wrap here, on this trading session wrap, you see the summary of the last sessions. You can just click on those and click on those summaries. So it's trading session wraps here, click on the summary, and you will get a summary of what's happened in the last session. It will help you navigate your way through a day-to-day trading basis. Okay, so now we've looked back. What we'll do now, I want to look forward. Now, looking forward, we have some flash services PMI and flash manufacturing PMI coming out for France and Germany. Now, this will be eyed very carefully because it's the last chance to get a kind of temperature pulse of the Eurozone economy before the ECB meet on Thursday. It's been the slowing down of German manufacturing which caused a lot of concern when it was originally felt. Okay, anything above 50 is seen as expansion. Anything below 50 is seen as contraction. So you can see here, manufacturing purchasing management index for Germany are in contraction territory, less than 50. Okay, if we get a less than 50 figure again, then there's going to be more concerns that the European Central Bank are going to be dovish and negative on Thursday. So one potential scenario I'm looking at is it possible to sell the euro from Wednesday into Thursday? If we get very poor data on Wednesday, then we might very well see that possibility materialize. But that's what I'm looking at there. Okay, so that's now Germany, the most important nation in terms of economic data, because it's the largest contributor to the Eurozone's GDP. Germany is the biggest player, so what happens in Germany has the most impact on the Eurozone in comparison with the other countries. So you've got to factor all that in, one to watch. Thursday, we have the ECB rate statement and press conference. Now, this is interesting because there is no there's no rate change expected for Thursday, but the consensus is that the ECB will cut rates in September and that they will engage in 40 billion euros quantitative easing from November. Remember, QE will result in weakening euro. There is an incentive for the ECB to present a dovish picture. Remember, the Federal Reserve, if the Federal Reserve just cuts rates by 25 basis points, then there's going to be a bit of pressure on the euro-US dollar pair as the euro-US dollar pair maybe bids on that kind of environment, because the ECB kind of needs to be more dovish than the Fed in order to keep the euro-US dollar pair offered and sold. There is an incentive for the ECB to have a weak euro against the US dollar. So just to be aware of that. Now, the base case is that there will be no change and that the ECB will signal what they're going to do ahead, right? So if the ECB move, say they cut interest rates early, okay? An early interest rate cut would likely to be 80 to 100 points downside in the euro-US dollar pair to pretty much instantly, okay? So what we're looking for is a deviation from the norm. If we get a more dovish picture, or we get like a package of things, and there is a possibility that the new economist for the ECB is in favor of introducing a package of things. So it'd be, an interest rate cut, more QE, and then a refinancing tiering system for the euro. So just to be aware of that, that's the risk. The risk is to the downside. Obviously, if they're not as bearish as that, if they're more optimistic than the market is expecting, then we're going to see some euro strength. It's unlikely, but you need to have both sides of the coin in your head so you can be aware of that. This is the most significant event of the week. It's the ECB rate. Remember, as I say, it's not just the rate that you need to look at, not just the statement, also the press conference. You want to see both together, okay? Because when you get both together, you get the full picture. Oftentimes, the press conference will either clarify or will, so in some instances, undermine the policy statement that's just come. So be aware that the market focuses heavily on that ECB decision. You should too, okay? So be watching out for that and reading analyst report. If you're struggling to understand it, read up some analysts now while you can. But that's basically the expectations. No change of the interest rates, but signaling a 10 basis points rate cut in September and 40 billion euros quantitative easing from November. Anything other than dovish ECB language on Thursday will be a surprise and will result in euro strength. That is the outlook for Thursday. And then Friday, we've got some advanced GDP out of the US. Again, we'll be looking at that in light of the Federal Reserve rate meeting. So dollar index, start the European session, up 0.35%. We saw the US stock market was obviously up. The S&P 500 futures were up. We saw the European bourses all up. Again, when we see a 1% rise, that is significant. So 1.34 the euro, 1% of the French CAC, 1.68% the German DAX, 1.4% of the Spanish IBEX. We also had the Nikkei obviously up 0.3, the Nikkei 0.95%, so nearly 1%. So the market, with these equity markets being supported, that is strong, and we're seeing some commodity markets lower on the strength of the dollar, as you'd expect. What we're looking at, just to show you, here's the intermarket correlation. When we have stocks rallying, we'll have commodities, bond prices falling, bond yields rising, risk on in FX trades, risk on, again, we'll cover that in a minute. Higher volatility index, we get stocks falling, we get commodities falling, we get bond prices rising, bond yields falling, and risk off in FX trades. So that's a little cheat sheet for you. Risk on markets that appreciate during risk on times. You get higher yielding currencies like the Australian dollar, New Zealand dollar, and Canadian dollar appreciate, and the Japanese yen and Swiss franc are sold off. We also get, in the opposite, when we've got risk off markets that depreciate, we have the pound and Swiss franc appreciate, Australian, New Zealand dollar, and Canadian dollar depreciate, and the Nikkei is a good kind of barometer for risk tone. I like to use the Nikkei. It's helpful to give you an indication of where risk is at. The correlation between the Nikkei and the yen are very highly correlated. Okay. So looking at the chart, so coming to this session, looking for a weak currency, I was looking at the New Zealand dollar. Now the New Zealand dollar, we've got that potential hints of RBNZ easing, so I knew that was going to be weak. Stronger currencies, we got the Australian dollar because we're in a more risk-on appetite, and when you've got risk, you see Australian dollar, one of the higher beta currencies, being bid. Okay. Now the good thing about trading Australian dollar and New Zealand dollar together is that if you get a sudden shift in risk sentiment, they both kind of move the same way. Okay. So I'm not really worried looking at an Australian New Zealand dollar long that Donald Trump's going to tweet something that's going to, result in a huge reversal or having to close out this trade, or being stopped out on a move. So I'll show you what I was looking at. I'll just call it up on the trade view. And again, very, very, very simple what I was looking at. Nearly there, folks. Well, intraday trading, I like to use the 15-minute chart. So it's here on the 15-minute chart. $15-minute chart, and the areas that I like to look for areas of confluence where you have multiple areas, in agreement, and that 1.0435 area looks potentially good. The area that I like for a buy is a 1.0406. So I like 1.0406. So down here, I saw that as a key area to buy. So any drops into that area for me is going to be a buy on support, and my stop loss is just below the lows here. So any return into this area here for me will be a strong buy. Okay, now that will I'll probably pull that before the ECB meeting on Thursday, but otherwise I'm looking at Australian dollar and New Zealand dollar longs because of this fundamental reason. So that's how I go about putting my trades together. I want to pair a weak currency against a strong currency. I want to have the fundamental reasons or the sentimental reasons in place. And you know, I've got no major data that's likely to move either of those two to come up in the meantime. So I know I've got a clear, you know, opportunity and you know, any indications to the, yeah, that's it. That's basically what it is. Okay. So that's how we go about analysing the markets. We use the sentiment, we look at key market events, and then we look at the charts. We develop the bias. We went through it twice here today. I showed the bias for the morning session, and I showed the bias for the afternoon session. The US dollar, Japanese yen long bias is only as long as that risk appetite continues. Okay, only as long as equities are being bid. The Australian New Zealand dollar trade has a little bit more potential. Again, risks to that trade will be a comment by the RBNZ saying they don't intend to be cutting interest rates. But there's also a slight divergence between the Australian dollar and New Zealand dollar banks. RBA is, you know, sort of being quite, you know, is on well, not quite on hold, but it, you know, it's holding up with the RBNZ. Looks like it could be having to cut interest rates at their next meeting. So there's a slight another help in that direction for that trade. Okay, again, looking at your risk, you always want to know, are you using leverage correctly? Are you managing your money correctly? Over leveraging is the biggest killer of new and aspiring traders. You need to keep your capital as much as you can. So if you're using too much leverage, you know, you're risking too much. You need to stop because it will cripple you as a trader. Don't forget the coaching sessions we do here. Essential one-on-one with me. If you deposit $1,500 into your own account, remember these are not money that you pay, but if you deposit $1,500 into your own account, you get 1 hour session with me, personal trading queries answered. Also get for $3,000, you get 1 hour coaching session with me and a 1 hour follow-up review. We do it like one-to-one over the webinar, like a bit like a Skype call. And then premium is you get the 2 hour coaching session, get the 1 hour follow-up review as you do with pro, but then you get an extra 1 week VIP support from myself. You know, sometimes that can be helpful to aspiring traders. And if you just want some help and support and coaching, HYCM are offering that facility now. So guys, I said that we had a lot to cover this session, and we've certainly got through a lot of stuff. I hope that's helpful for you. The key summaries, the key things to look out for is the ECB event on Thursday. There's a lot of euro risk for that, and we're likely to see some strong moves out of that meeting. Okay, so on Thursday, we're most likely to get a fresh movement, a fresh driver. And then with that fresh driver, then there's a fresh reason to trade. In these quiet markets, some of the key things to do is just preserve your capital. You don't want to be giving your capital back to the market during these quiet sessions. So that's sometimes where it's just best to do nothing and just to wait. And the ECB meeting on Thursday will be a definite event not to miss. And even if you miss it at the time, you got to be work or something like that. You can come back and see what the result of the meeting has been, and potentially you can start to see areas to potentially look for trades after the event. Okay, guys, I hope that's helpful. I hope you've enjoyed that session. Yeah, that's good. Oh, that's good. I'm glad that's helped, Olafemi. I'm glad. Yeah, thanks, Aaron. Thanks, Nadir. Thanks, guys. And don't forget, next Monday we'll be having the FX week ahead look ahead, and of course we'll be looking at the Federal Reserve rate meeting and getting a handle on that. Okay, take care, guys. Trade safely. I wish you all success, and I look forward to seeing you guys for the next time FX calendar week ahead on Monday or Tuesday. Yeah, have a good week, guys. Thanks, and you, Tribhuvan. Thanks, everyone. Take care now. Bye.